Welcome to part 2 on this series of engulfing candle Forex, stocks, futures. Really, this applies to any market that you can plot on a chart. Part 1, by the way, if you missed it, I will go ahead and put a link in the description box below, and you can watch that. So, some good comments on the last one. I want to thank everybody for the comments that they put in. And a couple of the comments I'm going to address right now and show you how to take what I shared with you last time and make it even better. Yep, even better. So we're still going to use the engulfing candlestick pattern, but now we're going to add something else to it. So let me show you what we're going to do and why. In part 1, I demonstrated real quickly that you can have engulfing patterns that are more than just 2 bars. Generally and traditionally in candlestick analysis, and I use this example way down here, a candlestick pattern is a 2-bar reversal pattern at highs and lows. But then I showed how, hey, that's one way of using it, but there's another way as well. And I showed this example of here, this red bar, and I said, look, that engulfs all these other bars before it. That's one. 1, 2, 3, 4, 5, 6, the 6 bars before it. And I said, so don't just think of it as a 2-bar pattern, think of it as engulfing more than just the previous bar. In addition, that particular video was called Trending Engulfing Candlestick Patterns because it didn't occur right at the high, right? We started going down and we broke out of a channel. Here's our channel. And we actually looked for a signal within that sideways channel to start a new trend down. So that's the distinction, that's the little uniqueness here of what I was teaching in the last video. Now, some people pointed out, rightfully so, that, well, hey, we had an engulfing pattern way back here. And we did. That is true. But then you can also look at a lot of other engulfing patterns that occurred. For example, way over here, we had an engulfing pattern for a potential long. That didn't work out so good. Not so bueno. Not really very good at all, in fact. So, and we could go through lots of charts and show you many engulfing patterns that don't work very well at all. So, the point is that engulfing candlestick patterns are very helpful as one part of an entire trading methodology. Remember, to create a probability in your trading, you need a number of uncorrelated variables. No one thing, whether it's price pattern, candlestick pattern in this case, indicator, moving average, whatever, no one thing gives you a probability scenario. You need a number of uncorrelated variables. So this is one piece of evidence as we read a chart. So today, I'm going to take it to the next step. We're going to add another piece of evidence. So let me show you what that's going to be. So I'm going to bring this up for you, and we're going to add an indicator. And that indicator is going to be the good old Bollinger Bands. And we'll just use the regular Bollinger Bands. Okay, and I like to use 2 and 20. You can use other variables if you want to, but these are pretty much the standard, so we'll just do that right now. And we'll make that 2. We'll make this black. We'll keep that at 1. That's the mid-range. We're not really going to refer to that too much today, but we'll put it on there since it's typical to do so. And then we'll make that 2, dos. Alrighty, and I don't like to put the labels on there. It just clutters up my charts. Whoops. So there we go. All right. Whoops, I got to move over here. So now you can see the indicator and the settings that I'm using. I always get people who are asking me about that, so decided to do that. Okay, so now what does this tell us? What extra information does this give us? It gives us a lot. It gives us a lot. So here's what it gives us in this particular case. So in this case, here's where we were looking. First of all, one of the distinctions was, we did have an engulfing pattern here, but notice what's happening with the Bollinger Bands. They're contracting. Okay, so that's not really a great high probability scenario. Could continue channeling, in other words. Doesn't give us a good time. There's no extra signal there. Now, One of the things that I said in the previous video is that what's different here is that we are looking for the engulfing pattern to happen on a lower high within that channel that we discussed. Okay, so that was one of the distinctions. Now, the thing we're going to add today is the Bollinger Bands are expanding. So if you get into this trade, I'd normally enter below the low of this bar. So I'd be getting in down here. Okay, and that's on this bar. So that's our setup bar. Call this my setup bar. That's my reference bar. And then the next bar is my entry bar. That's the one I'd actually be entering in, and I'd get in literally just 1 penny pivot tick below the low of that bar. Then when we form that bar, look, right above it, the Bollinger Bands are going up. And below it, the Bollinger Bands are going down. In other words, they start expanding. And what that mathematically indicates is that volatility is increasing in the market. So when I see that, that's my confirmation. That's the extra thing, or one extra thing that I would look at. Obviously, we'd look for some other things as well. Notice, too, it happens to come right to the mid-Bollinger Band. How about them apples? So we got a nice resistance there. And now if we go back to some of the previous examples that I showed, such as here, where we got an engulfing pattern going up, we don't have the Bollinger Band confirmation, right? Bollinger Bands are just kind of going sideways here. And by the way, one last little distinction. The dollars are in the details, as I like to say. When we're looking for an expansion of volume, right? We've had contraction during that yellow box. When you got contraction, that's a low volume scenario, or low volatility scenario, I should say, which often is accompanied by low volume, but not always, but low volatility for sure. And there's a cycle in the market between high volatility periods and low volatility periods. And so most of you are probably familiar with the good old friend, the Bollinger Band squeeze. So we look for, again, a lower high here, and then the engulfing pattern of multi-bars, in this case 5, and the Bollinger Band expansion, not just down. By the way, this is very important, not just down, but on the other side, you want to look for it going up. You needed both. That's it. If you liked the video, if you've got value out of this, please go ahead and share good things with good people. Go ahead and share it forward. Click the share button below. Also leave comments below if you have requests for other videos, other topics. I'd be happy to add those to my list. And if you want to share your ideas, feel free to do that in the comments as well. Give it a thumbs up. And hey, we're closing in on 50,000 subscribers. So subscribe to the TopDogTrading channel here. And what that'll do for you is you will then get notifications directly from YouTube. And YouTube will notify you every time I come out with a new video, which is every week. So then you'll be notified so you don't miss any of them.